Hello everyone, this is Chinmay from Trading Cafe India. Welcome guys to another weekly learning video. Well guys, in this particular video, we are going to talk in detail about the breakouts. Yes, we are going to talk about the breakouts where we can get a nice follow through move, and we are also going to talk about the breakouts which actually goes into the failure setup, and generally people actually get trapped at a very high point along with their buyings. Yes guys, this is actually a learning video along with the continuation. So in the previous video, I have already explained you about the market structure where we can actually find a meaningful consolidations. Yes guys, I'm talking about the accumulation and distributions. And in this particular accumulation distributions, you need to identify some particular patterns. So here's a quick summary. So along with this consolidation pattern, we generally find some nice patterns. I'm talking about the rectangle patterns and the triangular consolidations. And in this particular video, we are going to talk in detail about the breakouts from this particular pattern. So we have understood about the market structure, and now let's understand about the opportunities that we can grab along with the meaningful breakouts. Well guys, as a student of price action, I always understand where exactly the buyers and sellers are active. Well, generally the most active part that you are seeing on chart is along with the breakouts. Yes. When a nice breakout happens, it always comes up with the meaningful examples. That means it actually gives us the confirmation that after a very good tussle muscle between the buyer, one particular party is actually coming up with the winning hand. So generally, if you look at the chart here, if the market is going in one direction and then finally it tries to settle at one point, what we get? We actually get a kind of consolidation, and in this particular consolidations, we see a very good change in hand between the buyers and sellers. Now understand, if the buyers or sellers aggressively trying to compete with each other, now whenever they will come up with a strong hand, you will get a meaningful breakout, and this particular breakouts are generally the opportunities for the traders to get into that trade along with the specific stop losses. So in this video, I am going to talk about in detail about this breakout pattern. Generally, some breakouts actually gives you a kind of reversal opportunity, and sometime after a consolidation, we actually get a nice fall off. That means the price is continuously going in the similar direction. Well, at that time, we get another confirmation that yes, buyers are intact, and after a temporary hold, they actually want to go in the similar direction. Well guys, in my last 10 years of journey, I have actually learned a lot about price action, but whenever it comes about the breakout, many times people actually get a little FOMO. Now what does that mean? Well, everyone knows that market is into a consolidation phase and that stock is about to give you a nice breakout. Generally, whenever market actually tries first time the attempt, people start immediately get enter into it and they actually get stuck at one particular point. Now you need to understand what are the meaningful breakout. So before that, there are some traders who actually get a reference along with some indicators. It might be the breakouts along with the moving averages crossover, maybe along with the volumes. So now let me tell you, as a price action learner, I never get any confirmations along with the indicators. Generally, indicators are the lag and they're giving you confirmation much after the move happens. So let's understand the psychology behind this chart pattern and then why exactly we want to enter along with the defined risk, and that too along with the meaningful breakouts. Now guys, on board, it's an hourly time frame that I am looking into. Well, what we are having first, the market start moving in one direction. It was up direction and finally it halted at one point, and then after we are getting a very good series of ups and downs. I'm talking about a kind of consolidation, and if you are observing at one particular point, we are getting a very good resistance, and finally one time it actually attempted to break that particular zone. Now actually it's an image and the price action already took place. Now we know it's a false breakout just because it's a week, but in live market, many traders, what they do, they generally simple put alert as soon as this particular level gets break and they immediately get into that. Now you need to understand one rule. Now you can write down in your copies as well. Whenever you're trading at one particular time frame, you need to consider a breakout on that time frame only. Generally what happens, people actually track daily time frame, they track hourly time frame, and as soon as a 5-minute or 15-minute breakout happen, they immediately start jumping on it. Understand, if a particular pattern is developing along with one defined time frame, you need to respect that time frame, and a meaningful breakout will always come along with the same time frame. So what I'm I'm not having at all a hourly time frame breakout and a closing candle above that particular zone. Now, generally what happen? People many times buy there and they say, so whenever I buy, that becomes the highest point, and then after market start falling in the opposite direction and we got perfectly trapped. Understand? This is nothing but FOMO. What do you mean by FOMO? It's fear of missing out. So as soon as the breakout happen, I want to get the part of that particular breakout. I want to enter at a very early stage so I can get a meaningful ride, and as soon as I will enter, market will start flowing in my direction. Generally, this particular concept is in everyone's mind, and this concept is perfectly used by the operators where they will actually invite you along with this kind of spikes and they will start offloading their particular quantity. Understand, if I'm not getting a breakout and a kind of follow-up, I'm not going to get a meaningful ride out of it. So, first thing, avoid spikes. Now guys, see, this is another image I'm having for you. Well, it's another hourly time frame consolidation. Now what we are having in this particular consolidation, we are seeing another VCP pattern. Well, in previous video also I have explained you about the VCP patterns. These are nothing but the volatility contraction pattern. And if you have not followed that particular video, I am going to give you the link in the description box, and there is a I button where you can find this particular video. Now, talking about the VCP patterns or the triangle breakouts, generally this comes up with a very furious move. But can you see here, this is the first attempt where it actually broke the upper trend line, and then we are getting a kind of spike and immediately market get into that particular zone again. Now as soon as the price breaks, people want to get into it along with the FOMO. Well, this is exactly people actually stuck at a higher level. Now understood, luckily this particular triangle actually broke again in the similar direction, but there might be chances that after the false breakout, it will give you a breakdown and it will take your stop losses. So guys, on hourly time frame, if I see the price is actually in that zone and then for almost one another day, the prices remain in that zone, what will happen? Well, generally the retail trader give up as soon as they will come to know, okay, it was a false breakout and I'm perfectly trapped. Well, as soon as market will start again flowing in your direction, now you will come up with that particular excuse. Market actually came to take only my stop loss. Once I'm stopped out, it again started moving in my direction. Well guys, ask yourself this kind of excuses everyone gives. Well, market is not actually here to take only your stop loss. Well, it plays with the psychology of every retail trader, and that's why the operators or the smart money knows where exactly the good places where they can easily trap the new fresh traders. They don't know about the price action and a meaningful breakout. So again, avoid spikes. Well guys, here's another chart. I hope now you understood about the failed breakout along with these spikes. Whenever we are getting a strong candle out of that particular chart, then only we will think about the breakout. Well, in this particular scenario, this particular candle is actually applicable and it is also giving us a nice strong breakout above the chart. But can you see here? Then after it started moving down. Well, here you need to understand this particular concept. When guys, we are entering at any particular price, you need to understand its story and the movement actually. Here, from this particular zone, it started moving and in midway, it come up with the strong breakout candle. Generally, whenever breakout comes in between that particular consolidation and not from the high point, chances are very good that it will give you a false alert and then immediately it will start moving in the opposite direction. Well, understand here, if there is a complete transaction happen between the buyer seller in that particular zone itself, it will come up with the meaningful breakout. Now, what do you mean by the meaningful breakout? Understand, if a particular guy is shorting at this particular point and then market start moving in his desired direction, he knows this is the tested support. What he will do? He will actually try to book his profits here. But as soon as the fresh reversal guy will enter along with his buying position here. Now, generally whenever market first time attempt near the breakout zone, generally people who bought at very bottom, they will try to book their profit. Now, I am talking about the guys who like to prefer trading in particular zone. Well, there are some people who want price to go further up. Well, these are the high time frame traders who want to ride that entire zone and want to give you a meaningful breakout. But for that, what they want to do? they actually want to buy the positions of those traders who have bought it at a bottom. Understand, every single point there is a transaction between buyer and seller, and a meaningful transaction happens always near the breakout zone where the change in hand happens. Now, any guy who wants to give you a nice breakout, they will buy all the positions from the people who want to book in that particular zone. And then if you are getting a consolidation near the breakout and finally a breakout, definitely these are the meaningful breakout. Let's understand the example. Now guys, you must be wondering what exactly I mean about the meaningful consolidation before the breakout. Understand, in this particular chart, what I'm having a clear range. Well, it is a resistance and support, and multiple times it is getting tested and we are getting a nice rectangular consolidation. Well, you need to understand, whoever understands this particular zone on a smaller time frame, they prefer to sell at one point and buy at another. Well, those who are buying at a very bottom, they prefer to book their profits at the higher end. Well, we are getting insider trading in that particular zone. Now, whenever a guy comes in the picture who wants to actually create a meaningful buying, and that too in a very furious manner, what they need to do? Whoever buying at a bottom zone, now the big guys actually want to buy their positions at the higher end. So now these people are actually booking their profit, and the fresh buyers are taking their positions and creating fresh breakouts. Well, then after, if you are getting a breakout candle above the consolidation zone and not right from the bottom, well, generally this particular consolidation breakouts gives you opportunity to enter, and that too along with the defined small risk. Understand, breakout is not always about getting one strong candle. It is always about understanding where exactly I am going to put my money, and more about where exactly I am going to put my stop losses. If the stop losses are actually far away from your entry, it is never going to give you a nice risk reward ratio, and that's why if a consolidation happens near the breakout, it actually gives you a meaningful breakout, and that too along with a very good risk reward ratio. Now guys, we are looking into a chart where I am finding a perfect ascending triangle. See here, multiple times it is testing one particular zone and it is also creating a kind of higher lows. Well, now finally I am getting a meaningful breakout. But can you see this particular candle? Along with its closing, it is giving me a kind of strong candle. Well, generally these candles may have follow-up, but if you understand, it is always about where I am entering, and that too along with my defined risk. In intraday, generally we aim for 1% or 2%. Well, there might be days, if we are lucky, we are getting 5-6%. They are very rare days. So in generally intraday, we are aiming for 2 to 3% maximum. Well, if I am talking about swing trading, I will generally focus on 10 to 15% out of that particular zone. But in case intraday, if this particular candle is 2% or 3%, what I'll do? If I want to place my stop loss, I actually want another 5-6% so that I can at least get 1:2 kind of risk reward ratio. Here, if you are entering along with the breakout, but if you are not sure that it will give me another 1:2 at least risk reward ratio, don't enter in that particular trade. It is always about understanding your risk. Pattern becomes secondary when it comes to execution. So guys, up till here we understood about the perfect breakouts and where exactly we can get the trapping. So let's understand along with the favorable breakout where we can actually enter and get a very good risk reward ratio out of that particular trade. So guys, let's understand finally a perfect breakout and a trade management along with that breakout. Well, what I'm having a nice symmetrical triangle. Well, after the consolidation, finally I'm getting a breakout. Can you see this breakout? It is coming up with the small candle. Well, I'm getting a closing candle out of that structure. Well, it's a meaningful candle. And finally, after that, we are getting a kind of retracement, and it is retracing exactly near the upper boundary. I'm talking about the trend line, and then finally it is moving in our desired direction. So guys, let's understand a meaningful breakout and a retracement concept. First, whenever a perfect breakout happens, it always comes up with the double confirmation. Now, what do you mean by double confirmation? Well, there is always a shakeout along with the perfect breakout, and it comes again to test that particular zone. Now, the people who are impatient, what they will do? Immediately they think the price is not going in my direction and they easily give up. Well, these shakeouts always happen near a perfect reversals and a perfect breakouts. Well, these particular zones are nothing but to remove all the weaker hands from the system. Again, as soon as these weak people exit from the system, now a perfect ride starts. And that's why if any particular time market is retesting that particular zone, again, if I'm not entering at that point, here I will get my perfect entry, and that too along with the small stop losses. Again, understand guys, whenever you're getting a nice breakout, well, generally we try to identify our opportunity, but whenever you will try to attempt entering, always understand how much risk I'm putting on my table. Well, if the risk is not defined, and that too along with the very good risk reward ratio possibilities, avoid that particular trade. Well, there are so many breakouts that will go in your direction, and at that time you're not actually part of that breakout. It is perfectly fine. So far you're not making losses, you're a winner. Understand, this type of attitude is actually necessary at trading. Well, at this particular point, you will come to know if the risk reward ratio is favorable, I can put more money, and that too along with the conviction, and you can actually stay in that trade for a longer period. Well guys, in last video and this video, I have explained you about the perfect market structure, the consolidation and different type of consolidation. Well, in this particular video, I have explained you perfectly how to get the breakout out of this consolidation. Now, we have actually completed one circle. Well, if you are actually acknowledging all this effort that I am putting to give you an idea about the basic price action to the advanced concepts, definitely like this video and share it along with your friends so that they can actually get the benefit out of the real price action trading. So guys, if you're finding this content valuable, do like this video and subscribe to our YouTube channel.